Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Paul Gabrail, and he is the co-host of Everything Money. Welcome.
How are you? Thanks for having me on.
Sure. So, Paul, tell us kind of your backstory. I mean, you started investing at a very young age and really have bought into kind of Warren Buffett's approach to accumulating wealth and so forth. Tell us about that.
Yeah, so, I started investing back in the mid to late 90s when I was a teenager, caught up in the whole .com tech frenzy, not really understanding what I was doing, but I always had an attraction to numbers. It all started with my unhealthy obsession with Bill Gates. And then one day I was reading something about his friend Warren Buffett. And I don't remember exactly what I was reading, but it had something to do with, it explained his goal was to buy companies for less than they were worth. Mm-hmm. And he always says now that you either get it or you don't get it. I don't necessarily agree with that, but in that instant, I got it. And I always was an asker of questions, but I didn't apply that for a while. And then went to college, still kept investing through the .com bust, then started buying real estate. And I applied those methods of value investing to real estate sooner than I started applying it to stocks. So then now, as time went on, I started buying more equities, things like that. So I've always been an investor in some fashion. And over the years, also, we've started businesses in my company. But, now we're a company. My parent company is called the Crossroads Group. We have about 1,000 apartments and growing. We had about 400 or 500 a year. And then we have Everything Money, which is a YouTube channel and, podcast kind of thing. And then several other small businesses in there that we're growing along the way.
So tell us a little bit more about your YouTube channel.
Well, it's interesting. I started it. I always liked teaching, and I would go back once a week to my high school. For 8 years, I did this, where I would teach life, business, investing, and basically try to, offer a different perspective. Everybody thinks they offer a different perspective in this world. How many actually do? That's up for debate. But I felt I did because I'd always shock the kids with things I would say and do and very non-conventional things. And then one day, I was here in the company, and I was like, there's got to be some way for us to be able to teach people in the masses. Because, teaching 20 or 25 kids is wonderful, but I felt there was more to say to the masses. And we started a podcast, and it got probably 500 downloads a week, nothing major in the first 6-9 months. But then somebody in my office said, Paul, you got to be on YouTube. And I don't watch videos. To this day, I still don't watch videos. So it's kind of ironic that we have this big YouTube channel, right, and I don't watch videos. And so we started going on YouTube, and we had the setup, and it just kind of snowballed from there. I mean, it's the whole idea of, it takes, 10 years to wake up to be an overnight success. And, January 1st of 2020, we had 87 followers. End of the year, we had 8,700. End of the following year was 87,000. It just happened to be 100x, 10x. And, now we have several channels. The biggest one is 278,000. And I just like teaching my approach. And I tell people, you're not supposed to do exactly what I do. You're supposed to find the way that works for you, because successful investing, people don't realize, it's about being able to understand and apply your money to the things you understand, not to the things that I understand, not to the things that you understand, Gary, but the things that you understand internally that you feel you have a competence in.
Right. Now, how are you taking this philosophy, into your own life with your kids and teaching them about investing?
Well, so I have adult stepkids, and the youngest one and I talk a lot about it because he listens to the channel, and he'll have a question. He'll say, I don't like to impart things on my immediate family. It's kind of ironic that, we talk about these things and they come up in conversation, but I try to just do what I do. And if they show an interest, I don't, clobber them with it. I just kind of, because I'm very big. It's great you bring this up, because I always tell people, so many parents are against talking about money with their kids. And I think it's absolutely insanity. I just think, what are you doing? You have this opportunity to explain to your kids hey, we make X, we spend Y. If you want to do, this baseball camp, it costs $1,500. I've got to make $2,500 to pay that $1,500. Not to make them feel guilty, but just explain to them,
Sure.
hey, we have the ability to. And so, when it comes to, for example, my stepkid FaceTimed me while my stepson, my youngest one,
Mhm.
FaceTimed me while we were getting ready. And he was at a property in Dallas that I wanted him to go see. So it's little things like that I just, hey, can you go see this property? It's not to say, hey, see this property, then see it. It's just let him dip my toe in, dip his toe in. And if he loves it, great. If he learns something, he will learn over time. But my big thing is not to, because I used to be a very intense, like, come on, go learn this. And now it's more like, hey, if you find interest in it, I would gladly share that. If you don't, I'm fine with that too. I'm very big on, like you said, if right before we got on,
Right.
there's so many great people who have great small businesses. You don't have to be a billionaire. You don't have to be worth $100 million. Just build a great small business that provides great value to your customers. And if you do a good job with it, what else can you ask for?
Yeah. How do you see, you know, in schools these days, even starting, even at some colleges, I'm going to say, they don't talk about finance. They don't talk about, balancing a checkbook. They don't talk about any of the personal finance stuff. Um, where do you see us going? Because this isn't happening.
It's never happened. My wife, she always jokes with me and says, I wish I'd learned this stuff that you talk about at home, when I was in high school. And I was like, yeah, I know. And unfortunately, and this isn't a knock on teachers, it's just a knock on society in general. We don't
Correct.
really understand a lot of, things in the world of investing and saving, like the power of, I mean, listen, I was once at a private wealth firm, and they also had an insurance division, and they were trying to get me to do basically my own self-insurance for my properties.
Right.
And the one guy said to me, well, Paul, you can take this money, you can deduct it, you can put it in an account, you can invest it any way you want. I'm like, so you're telling me if I just put it in an ETF, this $500,000 a year I'd save, I would grow to $800 million in X number of years? He goes, well, no, it'd be 500,000 a year for, 40 years. I'm like, yeah. And at 10%, whatever the number I said. And he was like, no. And I'm like, yes. And I finally did the math and the numbers. I said, look, he was like, that's not possible. And I was like, I remember looking at the guy who brought me into the meeting. And later on, I said, a guy in his position talking to a guy like me needs to understand that compounding interest works this way. He had no
Right.
clue. And that's not even a teacher. That's a guy who's literally responsible for talking to people with 1,000 apartments or 2,000 apartments about how to save money. So with teachers, it's not their fault. And we've actually talked internally as everything money grows, we would love to be able to teach teachers how to teach kids about money and have sort of like our own curriculum for kids, because it's not taught anywhere. And you don't need to be a rocket scientist. You don't need to be a genius. You just need to be competent. And what does that mean? Save as early as possible, put it in low cost ETFs, and let time take care of itself. That's it.
Yeah, I think so much of it, just going back to, what you said earlier, it's like, okay, if you got that baseball camp that's 1,500, we have to earn 2,500 because we have to pay taxes, so forth and so on. I think that is so lost at home because again, it's almost like religion and politics. It's taboo and you're not
Yes.
supposed to talk about it.
Yeah.
And I think that that's a huge mistake that is made. Um, you know, I got a 16-year-old son and he's already working and he's already finding out, hey, for me to put, gas in my truck, if it costs, $50 to fill it up, I got to make, whatever, 150 to be able to have, the right amount of money and so forth. So he's learning that. And it's funny because we're having the discussions and he's like, man, it's kind of expensive. And
Yeah.
it's like, you're right. It is. But learning that, I mean, same thing when, kids are looking at colleges and how
Yeah.
expensive it is to go to college. And what is it that you're going to college to get your degree in? And you look at, some of this, universities that they want to go to, 80 to $100,000 a year. And the
Insanity.
The degrees that they're coming out with, they're never going to make that money to be able to pay off the loans if they have them, or if they were lucky enough that the parents had the money put aside for them. Are they ever going to make that kind of money? Um,
Yeah. I'm I was very fortunate. My parents were both doctors. College was not an issue. I went out of state to University of Michigan 20 some years ago. It was 32,000 plus room. I mean, now it's 75. And
right,
if, if you don't have absurd means like that, then there are phenomenal in-state schools. I mean, listen, I
right,
went to Michigan, so kids from Michigan went to Michigan for 14,000 versus I just tell
right.
people, I'm like, the whole idea of, I go to Ivy League schools and go to all these. I'm like, come on, give me a break. There are great state schools. I mean, listen, I went to Michigan. There's no school in the world I hate more than Ohio State. But every kid I know in the state of Ohio who says, "Oh, I want to go to this school." I'm like, "Why? You have Ohio State in Columbus. It's an hour and a half from every part of the state. It's an hour
Right.
and 45. It's a good school. Go there. Yes, you're a terrible person for being at Ohio State, but go there because it's still, I mean, it's so cheap to go there and it's a good school. I don't get this whole fascination. This is coming from a big former education snob. I used to believe you go to the best school you possibly can. And if you don't have the money, you borrow every dollar to do it. I bought into that. And now I just look at it going, oh, what a terrible idea.
Yeah, yeah. What we've had the election now.
Yeah.
And whatever side of the fence you're on. Where do you see investing in the economy going here in the next, 3 to 5 years?
No clue. Only thing I'll say is, so if I'll say two things, first off, anybody who says they know, you can immediately scrap what they're saying, throw it out the window. What I will say is we're sitting at valuations that we have never seen, arguably since the Great Depression. We are far worse in one valuation metric that's the most reliable one that Warren Buffett talks about, stock market GDP. We're at the highest level in history relative to, if you look at the dot-com boom, we are double that valuation level from the stock market GDP ratio. Where does that mean we're going to go in the short run? No clue. All I say to people is don't expect the last 5 or 10 years to happen. It could happen. We could
Right.
have massive inflation, major economic growth, a couple of things that would cause that to be okay. But even then, when you're double historical valuation metrics, in order to even keep up with that, you've got to grow at an insane rate. When I see things like cryptocurrency, an asset that I sit there and say, I don't see how there's any tangible value growing crazy like that. I think that's like a sign of the times. When I see, the markets deteriorate from the outside in. And a few years ago, we had all these EV companies who had who had very little revenue or no revenue, just start crumbling. You saw all these other companies just start crumbling that didn't have fundamentals. But then you saw these Magnificent Seven, legitimate, great companies that people plowed money into in the stocks, and the stock skyrises. Those companies are not going under.
Right.
But doesn't mean they can't fall precipitously. And I just look at the current stock market and valuations and say, hey, listen, I own 21 companies. I've bought a lot in the last 2 years. I'm not fully vested. That works for me because I have 1,000 apartments. I have other businesses. What everybody needs to worry about is 30 years from now. And I'm very confident that 30 years from now, we'll have a larger economy that makes more money than we do today, and more than likely a far greater stock market. I mean, I don't think we're going to be the Japan of 1989 that just recently saw, the level they hit in 1989, because we have population growth that they didn't have. We have other things that they don't have. But to guess what's going to be in 3 or 5 years, I never would have thought we'd get here. But we're here right now, so it is what it is.
Right. What do you think that some of the common mistakes people are making when it comes to investing?
Trying to time the market. It's a learn from my lesson. I wasn't invested because I mean, the other thing is my situation was different, but I thought valuations are insane. Let me pull money off the table, pull money. Guys, you're in this for 30 or 40 years from now. Just stick them, or 20 years from now, it doesn't matter. Stick the money into low cost ETFs and don't look at it. People look at their accounts and I go, don't look at your account. You know what I mean? And by the way, not because if it's falling, even when it's going up. That same stepson of mine, he was in town last week and he hadn't looked at his account in 2 months. He opened, he's like, holy cow. And I'm like, why'd you do that? He goes, I mean, it's so much higher. I said, but it doesn't matter. You're not going to touch it's in an IRA. You can't even touch it till you're 60 something. Why even look at it? He goes, I don't know. I like seeing it. I'm like, well, and I just tell people, just your job, just save. The stat I always give is the .com peak. The NASDAQ hit 5,050, 5,100, something like that. From the peak to the bottom, it fell 83%. But if you started dollar cost averaging at the very peak, the very top of the market, and you dollar cost average to today, you would have made 13.5% return on your money in the QQQ and 10.5% on S&P. So I look at that saying, guys, dollar cost averaging works. Look at Japan. I did the numbers the other day. Japan, their index hit 40,000 in 1989 and hit 40,000 just recently. That's 35 years of no growth. But if you dollar cost average, it's not a big number, but you made a little over 3%. You might sit there and say, Paul, that's terrible. But remember, the index was even for 35 years, and that was after falling like 80% at one point, and you still were able to make a return on your money just by dollar cost averaging. Take the guesswork out of it. Low cost, market-based ETFs, and you'll do fine. And dollar cost average, and you'll wake up a much richer person decades from now.
So if you got to go back in time and talk to your 19-year-old self,
yeah,
is that what you would be telling your 19-year-old self?
It's hard, and because I'm my situation is entrepreneurial. Right. Love having my hand in different investments. I have apartments, I have businesses, I have stocks. So, for me, it's more of, if I were to tell 19-year-old self person is, don't believe that just because somebody's older, they're smarter than you. And vast majority of people, as I got older, the one thing that I really saw that was interesting to me was we're all dumb and we're all smart. It's about finding where are you smart and where are you dumb. And that's it. And the faster you get things done, the better you're going to do in life. Those are the things I would do. The investing thing was never a concern of mine. And even now it's not because I just look at it going, I've got time on my side. And fortunately I have enough. But if I were to tell the average 18-year-old, like I used to in the high school, it's exactly that. It's just guys, whatever you need for retirement, do your math. Put that every single month in your low cost ETFs. If you have extra money left over, you want to pick individual stocks, learn a process. And I believe the method of what our channel goes through, which is teaching value investing, which is the idea of pay less for something that's worth, that method works. It's just hard because you have to have the thick skin of looking wrong for a long. I mean, look at Bitcoin. You know how many texts I'm getting from people saying, boy, you're really right on Bitcoin, huh? And I'm like, we'll see. Maybe I'm wrong on Bitcoin. I don't know. But the point is, I don't lose sleep over missing out on gains ever. And I have a company that I bought a year and a half ago. It's up 4x. You don't see me touting it as like, look how right I was. I'm like, no, I think it's overpriced now. But the difference is new Paul won't sell it just because it's overpriced. It's a great company that I think has a great long-term perspective. If it falls, fine, I'll buy more shares. If it goes up, fine, I'm fine either way. And that's the thing that people have to remember. It's the emotional aspect of being okay, whether it's up 40%, down 40%, but as long as you understand the fundamentals and you understand what you're buying, you'll probably do well in the long run.
Now, you said that you have quite a bit of investments in, apartments and real estate. If somebody's looking to get involved with real estate, where should they start?
First off, go to our channel, everythingmoney.com/everythingmoneyrealestate. Is that that's the address? No, sorry, youtube.com/everythingmoneyrealestate. There's a lot of great. I remember, so when I was in college, here's a great story. When I was in college, I wanted to learn about real estate. So I Googled, well, at the time it wasn't Google yet. I didn't know about Google at the time. I went to the university website, typed in real estate, and there was a professor there who specialized in real estate. And I was a senior in college. So I was going to graduate soon. And I said to him, hi, my name is, I still remember his name because it was, anyways, I emailed him. He said, let's meet at my office. I went to his office. He said, so what do you want to do? I said, well, I'm going to leave college. I want to get started in real estate. And he said this advice to me, Paul, leave, get a job in property management, and 10 years down the road, start buying real estate. Pardon me, but I walked out of there like this.
Right.
And he was 100% wrong. Complete moron. To this day, I want to go back to school and say, that advice you gave me, luckily, I'm not a lemming like everybody else. But everybody looked at him like, this guy is the expert, and I should do that. The best way to get started in real estate is start. Even if it's you and a few friends put in 5 or 10 grand each, you buy one house. What's the worst that happens? The worst that happens is what? You'll probably be fine. Even if you lose a little bit of money, you'll probably be fine. We have a real estate calculator on our software for that exact reason. You put in your expenses, it'll tell you your returns. As long as you understand your expenses, what goes in, you'll be fine. Get started. You know what I mean? And that's the thing that, just know that I hit the ground running. Now, keep in mind, my first real estate deal, my first apartment deal was awful. But the thing is, I didn't stop. I said, okay, I learned from this one. Let me keep going. Don't risk more than you can afford to lose, and you will be fine. And it's getting started that matters. Yes, it's great to learn, but you guys still got to be ready, be willing to understand that in all likelihood, you'll probably learn from the wrong person. So go hear different perspectives on how people manage real estate. I'm a big believer in, I want the most expensive rent on the street. I hear nobody saying that. And that's my big mantra. In fact, I'm told by people, don't say that to banks. I say that to everybody because I want to have the most expensive apartments on the street because we want to have the nicest ones on the street, et cetera. So there are different ways, but you have to pick the method that works for you. That method works for me, and that's why I do well with it.
But why is it that you pick the most expensive rent on the street?
I don't pick it. I want to become it.
Okay.
So I buy the cheapest on the street to make it the most expensive on the street because people always think that you got to have low prices. No, Ferrari doesn't sell the lowest price car. Your job should be to understand what the people in your market are looking for and give them a little bit better and charge them a little bit more. Because you'll find that the more you charge in rent, the better tenant you get, the less maintenance issues you have, the more collections you have, and the more money you make. So your expenses go down, your revenue goes up. Another thing I would say is don't ever hire third-party managers. If you can't manage it yourself, don't even do it. I truly believe that. Or have a partner of yours be the manager and pay them accordingly, but make sure they put money in the deal. Make sure they have a stake in the deal. Yeah, because if they all of a sudden starts going poorly, guess what they're going to do? And everybody will say, I'll never walk away. Trust me.
Yeah.
Show me somebody's incentive. I'll show you their behavior. If somebody's not doing well and they don't have money in the game, they're going to drop the keys off to you and walk away, and you'll be stuck high and dry. I've seen it happen 1,000 times.
Now, do you have a good real estate attorney that's on your team of professionals?
So I hope my real estate attorney sees this. A good real estate attorney as opposed to a bad one. My joke is I don't buy into the mantra that a real estate attorney and accountant are going to make or break your deal or going to make your deal better or not. I mean, in fact, I remember one time my best performing property, my best returns I ever got, my real estate lawyer tried to talk me out of buying it. My second best real estate deal I ever did, my estate lawyer tried to talk me out of buying it. And I remember thinking to myself, if they're trying to talk me out of buying it, I'm probably onto something. And guys, you're going to be responsible for your money. Listen, your lawyer's job is to tell you your risks. That's your lawyer's job. That's it. Your job is to decide what risk you're comfortable with. That's it. Now, it doesn't mean that you should go against your lawyer, but if your lawyer has a valid reason for why something is risky because of a legal perspective, listen to them. But if they're talking about it from an investment perspective, they're not investors. They're not investors at all. If they have a legal risk, like, hey, Paul, what you got to know is regulations on this area, blah, blah, blah. Great. I will listen to you on that one. But these two lawyers started telling me, Paul, you're going to lose your money on this deal. It's not a good area to be in. Okay, sounds good. And literally, they're my number 1 and number 2 real estate deals I've ever done. And they're the only ones I've ever had a lawyer ever try to talk me out of. Isn't that ironic? Because lawyers are the same as you and I. Right. They're the same as everybody. They get emotional and they look at perception. One was a deal in Mexico. My lawyer was like, you can't do Mexico. It's so dangerous. You're going to get kidnapped. And that was the number 2 deal. I was like, okay, now it's one of our biggest businesses where we have luxury homes around the world that I started with 2 homes in Mexico. So anyhow, the point I'm trying to make is people, I remember once meeting with a kid a while ago, and he said, Paul, I'm putting my team together. I go, who's your team? He goes, my insurance agent, my accountant, my lawyer, and my real estate agent. I said, absolutely useless. It's like, just get started. None of those people are going to be holding the bag for you if you do well, are going to be holding the bag for you if you do poorly. Go do it yourself. These people aren't going to make you successful. In fact, I think the exact opposite. I really truly believe that you have to be the driver. You have to listen to their advice, not except for the realtor. Listen to everybody's advice on, hey, from an insurance perspective, this is risky. From a legal perspective, this is risky. But other than that, you're the one to make the decision, nobody else.
Well, I mean, they're the expert in their field, and you're the expert in your field, and I think that's the difference there.
Correct. I agree with you, Gary.
All right. What have I not asked you wish I had?
I kind of touched on it earlier. The only thing I tell people is don't get caught up in looking like you're working hard. I brag that if I could sleep 15 hours a day, I would. I brag that everybody thinks I wake up at 5 o'clock in the morning. I begrudgingly wake up at 7 o'clock in the morning. And on weekends, my wife has to wake me up at like 9 going, get up, let's go. But you know what? I'm highly effective when I'm awake. I get my stuff done, and that's what matters. Don't get caught up in bragging about how much you work, how busy you are. If you're busy, you don't get things done. The person who gets the most done the fastest wins in whatever you're doing in life. It doesn't matter. I always tell people, at high school, every year I'd start the class off with, I'd point to a kid and say, walk to the door. And they'd get up and walk right to the door. And I'd walk up and down the aisles, up and down, then go to the door. And I'd say, who worked harder? And every year they all say the same thing. Well, you worked harder. I said, okay, why did I work harder? Well, you did more work. I'm like, that doesn't mean I worked harder. I was like, but who would you rather be, me or him? They always say, and there's always like silence. And they say, we want to be him. Exactly. That's the goal in life. Get it done faster. Let everybody else worry about bragging about how hard they work, because the people who brag about that usually aren't working very hard at all. They're just not getting things done.
Yeah. I always kind of equate that to, lots of times, the business owner does put in so many hours and everything else. And if you really break down the amount of money they make to the amount of hours that they work, they could go work at McDonald's and make the same per hour. So it's, that's definitely I like the analogy that you use with them, because I think that pushes it home a little bit more.
100%. Because they all look at me and they're all like, well, every single year, I'm waiting for the 1 year, every single year. It just happened last week. You work harder. No, I didn't. I did, but I didn't. And that's why whenever somebody says, I work, that person works hard, I'm like, what does that mean? Everybody says, how many hours a week do you work? I always say, as many as I need to get the job done, no less, no more. That's it.
Right. So, Paul, if people like what they hear, they want to reach out to you, they want to talk to you, they want to, watch your YouTube channel, how can they reach you? Where can they find you?
Very easy. youtube.com/everythingmoney. Watch our videos. We post 3, 4, 5 videos a day. A week, sorry, a day. We used to do 3 videos a day.
Yeah.
On Twitter, on X, I'm at EMPaulG, EMPAULG. And it's basically it. I mean, I'm very active on Twitter. I love engaging with people. I love talking to people on the videos. I think it just offers a great perspective on how to think about the world and life. And if it speaks to you, love it. If it doesn't speak to you, no harm, no foul. I'm okay with that.
Great. Paul, I appreciate your time today. Great talk.
Thanks for having me on, Gary.
Sure. Hey, this week, my guest was Paul Gabrail, and he's the co-host of Everything Money. I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.